the idea or the premise of an accredited investor is that if they have money, or at least the sums of money that we just talked about, it is assumed that that person will ask the right questions, will know what questions to ask, and inform themselves before making a decision. Whereas, perhaps a person who doesn't have that knowledge may not.
All right, let's get after it, everybody. Russell Westcott, Domenic Mandato.
Hey, Russell.
How are you doing, my brother?
Real good. Great to see you.
Before we get into the deep end of the pool here, the most important question I'm going to ask you, how's the family?
The family's great, growing. Finally, we have our first child going to university, so can't believe we're there already, but everyone else is doing real good, truly blessed.
Yeah. For those of you that don't know, Domenic, the most important thing, as much as you've accomplished in anything in your life, family's number one, isn't it?
Yeah, absolutely. It's a big part of our life, and we grew up with a tight family, and now we have our own, and so it's real good. 5 boys?
5 boys, and you? You're the 6th boy?
My wife always says she has 6 boys to look after. Right?
It's Teresa, right?
No, Rosa.
Saint Rosa.
Yes,
we've
right.
dubbed her with having that many boys in the household.
She is a saint. She's a saint having to deal with us.
Yes. Well, that's what you find out why you're doing a lot of this stuff is you do it for a family. And that's the reason why you get up early in the morning and work hard, and then you take the time off and you do all this hard work. Now, just for context for everybody watching this, we are in downtown, just off downtown Calgary.
Yeah.
The Bow River is not too far away. And here's the really cool thing is the building that we're in, your company owns this whole building.
That's right.
Do you not? So what is this building?
This is the York. We bought this. It's a mid-rise in downtown Calgary, and we bought it in 2011. And we bought it with, at the time, it was one of the more expensive buildings that we had bought, but we were looking to transform the entire building. We've renovated, we spent a lot of money on it, and we just changed the entire profile of the tenants. Yeah. And so it's done really well for us. We're actually considering selling it because we made a little bit of money on it. And
how are you as a tenant? To yourself?
Well,
are you going to be kicked out soon? Or?
Yeah, I'm going to kick myself out, right? And it's funny because we are in the rental business, and we did have our own office on Glenmore, and and I always said, as much as we rent our buildings, I just couldn't find myself paying rent to someone else. So we said, the next time we'll buy a building, we'll move into it. Yeah. And so the plan was actually just to stay here for a couple of years, see the project and the renovations go through, and then move into another building. But actually, that time is coming here soon because we've got an accepted offer on another building here in Calgary, and so there's a good chance we're going to be moving there.
So this is if you will, the InvestPlus World Empire headquarters to start with, right?
Yeah? They're making it sound really big. If you look at the size of this office, it actually doesn't look that big as World Headquarters.
Well, but if you're mindful of the cost, you actually want to have the smallest office.
It's a great deal for InvestPlus to be in here, right? Yeah. So it's worked out really well. I mean, as you know, it doesn't take a massive amount of people to run a real estate business. And so this works really well for us, right? Yeah.
Well, we're going to get into, some serious raising capital conversations because, I'll be honest, you and, like a Thomas Byer, a Brian Pullis, there's a few people that I actually extremely owe a lot of gratitude towards for the sheer inspiration, just the wealth of knowledge and what you guys have done. And I know where you've started and where you came from, and holy moly, it's come a long way. You probably have to pinch yourself every once in a while too with things. But I just wanted to, as a starting point, just offer some thank you to just the best way to put it is you've kicked ass, right, as a starting point. Right?
Well, I appreciate that, Russell. I don't feel that way as just another business owner, but I appreciate that.
Yeah.
Thank you.
So some of the people might not have heard of Domenic Mandato. As strange as that may sound, but and I honestly think everybody should know Domenic, and because of just what you have done. But let's just take a couple steps back, and let's maybe set some context about where you started and maybe where you got your first place, and then maybe we'll take it right to where you are now and what's next for you now. So where'd you get your start?
I think a lot of it came from you mentioned family before, and for men, and boys growing up, there's something that happens when you're in your 20s and you realize saying, you know what, I think I got to make myself, I got to do something with my life. I've got a family now. We had a son on the way, our first son on the way. And so that kind of inspires you as a man to go out there and do something with your life. Yes. And hopefully, grow it to a point where you can not only raise a family, but also have a good life and have some of the great things in life. Yep. And so for us, it all started when we lived in Burnaby. We had moved to Burnaby from Montreal in 98. And it really only started in 99 where I started buying homes.
So you've been an investor since the turn of the century.
Oh, just before. That's right. Just before the turn of the century. That's right. And it's and 1999 was our first two properties, our home and a condo up in Edmonton, which we still own today. So and that's how it simply started. And the truth is, it was the first realization that I could buy real estate without my own money because we just went basically purely on credit. And we had a bank who actually loaned us the funds to buy our first property. Yeah. So
I bet you're wishing you kept that one place in Burnaby too, if you found a way to keep that sucker.
You bet I would.
What would you have bought it for at that time?
So this was 99, and I bought it for $300,000.
All right, probably 1.3 million.
But $300,000, to give you some perspective, in Montreal would have bought you a mansion, would have bought you a massive house, and so I was almost embarrassed to tell my family that I bought this home because it required so much work. Yeah. But it was on Capitol Hill, facing the city, facing the inlet. And so it was, from a viewpoint, it was fantastic.
Yeah, I'm flipping a condo in New West and it's $520.
Is that right?
For a 2-bedroom condo.
Oh my gosh, yeah. So real quick, so we bought it for $300. Yeah. We spent about $60,000 on it. And then when we moved from Burnaby to Calgary in 2003, and it's funny, the house, sat on this on the top of the hill, but it had the bedroom, master bedroom, had this massive hot tub.
Yes.
Right. But the way it was constructed after renovating the house, I just didn't have the confidence that this hot tub would sustain the weight of any water. And so I never filled it up. And so when I decided to sell it, simply because if I rent this thing, what's the first thing that tenant's going to do?
Oh, they're going to fill the hot tub.
They're going to fill the hot tub and find themselves in the basement. And so I just didn't want that headache, and I decided to sell it. So we spent $300,000. We spent another $60,000 to renovate it, and then we ended up selling it for $400,000. Yeah. So this was 2003, and by 2004, 2005, that house was worth at least $1 million.
Yeah,
right, and it's probably worth 2.5 now.
Yeah, it'd be at least that. I know my wife's parents sold a place not too far from there, land value only, and it was 1.3 type thing, just land.
Right,
and they were potentially going to knock the house down.
Yeah.
So you moved to Calgary. And that's when you got a little bit serious when you moved to Calgary. Was this your full-time gig at that time, or what were you doing?
It's still, no, I was still working for a company at the time. By the time we moved to Calgary, it was only then where we incorporated InvestPlus. Yeah. Up until that point, we had bought some houses and duplexes across the country. But only when we moved to Calgary was really when the transition to multifamily and some commercial came about. So talking about that first house, and we sold it for $400,000. Some people will look at that and say, okay, well, you know what? I could have made $2 million, all that. But at the same time, it got me to where I am, Absolutely. Right? And those decisions. And so when we sold that, it allowed us to buy an even nicer home here. Yeah. And we had some cash to buy something else. And so in 2003, we had moved to Calgary, and I had just joined the Real Estate Investment Network in June. And
a wonderful organization.
That's right.
I highly recommend, if anyone is not a REIT member, you should be one.
And it was then where 2 or 3 meetings in, I realized I'm at the right place at the right time. And so having experienced real estate and what it's done for us up to that point made me realize, okay, this is it. This is my opportunity now. So we sold everything outside of Alberta and bought our first multifamily in Edmonton.
Well, you had some holdings still in Montreal, until that point.
Until that point, yeah.
And the Régie was a little bit tough to deal with.
Oh my gosh, yeah, the Régie was a bit of a nightmare, and in fact, it was one of the reasons why we ended up selling because you just can't. You can't make money in real estate there, at least not within a short period of time, unless you're looking at super long term. Yeah. And so, cash flow is okay, but if you have some massive, capital expenditure, if you've got a roof like we had to do, just to get that money back would have taken us at least 15 to 20 years. Yeah. But we did buy right, and the market was improving. And so when our property manager, who happened to be my partner as well, decided, you know what, I don't want to manage anymore, we decided to sell it. We still did okay. So
then you doubled down. Essentially, you cashed all the chips in elsewhere, and you doubled down into the Alberta marketplace.
100%.
Your first place was Edmonton. Where's your target markets?
My target market back then would have been Edmonton and Calgary. We looked in Calgary, and the price point was about 15-20% higher than Edmonton. And there were two reasons why we went up to Edmonton. One is, well, I only had a limited amount of money, and so it would just buy me a bigger building up in Edmonton. And two, given where all the long-term work was going to be with all of these projects that were taking place, it just made a lot more sense for me to buy in Edmonton. And those are really the two reasons.
Your money just went a little bit further, right?
It did.
From there.
It did, yeah.
So that was 2002, 2003?
2003, 2004.
2003, 2004. Okay, then fast forward, so you started acquiring more real estate at that time. How many properties would you have bought, say, up until, say, 2010 at that time?
Right. So actually, right up until about 2008, we had about 90 doors. Yeah. And it wasn't really until then when I started to go full time.
Right. So you had 90 doors and you were still part-time.
Still working.
It's still a hobby.
Still a hobby at that point. That's right. But it did start to have its challenges with managing the portfolio and work. And so, in 2000, in August of 2008 is when I went full time. And in September of 2008 is when the world came to an end with the financial crisis, right?
Yeah, and another story was somebody who just said, we just got an accepted unconditional offer. The next day, Lehman Brothers went down.
Right. Yeah, and so that's a good shock, right, to the system. But it's those moments that if you're able to sustain that, sure, you'll get a little bit more gray hair, and there are some sleepless nights. But those moments really build you as a character because if you can get through that, you can get through just about anything. So you know that there's a solution to every problem, so long as if you haven't dug yourself in so far deep that you can't get out of it. And even then, there's always a way out. There's always a way out.
Well, that's what I love about you is that you will find a solution for every problem as opposed to finding a problem for every solution.
Right. You can do that easily, right? It's a lot easier to say, you know what, I give up.
So now we're going to date this interview into 2018. So from 2010 to 2018, you're just keep growing and keep refining your systems and doing some different capital raising, which we're going to get to a lot of that as well. So what happened during, say, that 8-year time frame for you? So
this is when it became full time. I really had to make a decision because once you get to about 90 doors, a couple of things come to mind is, okay, well, what do I do with this? Do I continue buying one building a year or two buildings a year? Or do I actually make this out of a business in terms of raising capital and really grow? Because up until that point, I've raised most of my capital within friends and family.
Yes.
And you're able to do that without, infringing on security rules and things like that. But after that point, I figured if I'm going to grow this, because multifamily and commercial buildings require a huge amount of capital, I would have, I needed help to raise capital. And so from 2008 right till about 2014, we raised about $15 million. We bought about $50 million in assets and apartments and commercial buildings. And then in 2014, we decided that we had all of these several companies, each managing from 3 to 6 buildings in each different corporations, and it became a bit of an administrative nightmare.
Right. A little bit of a cluster.
Right. So it allowed us to grow, which was great, but then it just became an administrative nightmare. And so with the approval of our investors, we decided to take all of those assets and roll them into a real estate trust.
Yeah, a REIT.
A REIT.
Yes.
Yeah, a real estate investment trust. And so we did that from at the end of 2015, and we've had the trust now for almost 3 years.
Okay. Yeah. So to your two numbers, and it's okay if you don't know the exact number, because it's quite funny. Sometimes investors don't know the exact number. What is the ballpark number of asset valuation in dollars and maybe units, and then also maybe ballpark number of amount of capital that you guys have raised in your best estimates?
So as of today, or as
sure, as of right now.
Yeah. So as of right now, we have about $35 million in assets.
Yep.
And this is just the real estate trust. There are some other holdings and joint ventures that we have as well, but not including those. About the REIT itself is about 35 million. Over the course of the last, I'd say where the bulk of our money had been raised between 2008 and 2014 is about 15 million. $16 million.
And the reason I ask is during this interview series, we're kind of roughly calculating it. It's now surpassed 100 million in capital raised. It's called the 100 million plus club.
Right.
So thank you for contributing in a few single to that as well.
That's right.
But here's the message: is you truly just started with friends and family and buying a few single family units along the way, and just started one property one step at a time.
That's right, and that's really you go to your closest friends, the ones that you think they have money, but also are probably going to be the ones who are going to invest with you because they know you, they trust you. And we'll learn later on in terms of fundraising, that is the one hurdle, probably the first hurdle you have to get over is, does that person have your trust?
Know and trust. Well, that actually is a perfect segue to the first question. A lot of people, when I have a conversation with them, they almost have a fear around talking to other people about money. Right. I don't know if you ever had that fear, or obviously you've gotten over it, or maybe you still haven't gotten over it. It's one of those things. If I was sitting here going, Domenic, I'm scared to go talk to family and friends about money and the raising of capital, what advice would you give to me?
I don't know it all depends on how that conversation starts off. I mean, if you come out saying, hey, let's talk about money, or
give me money.
Let's talk about real estate and how I can make you a ton of money, then you're going to scare that person away. But you can simply, just like we started this conversation, really didn't talk about money until right now. So it's you gotta find a way to segue into that conversation. Right. But ultimately, we know one thing's for sure is that the majority of people want a good lifestyle, right? Yes. They want to be able to be in a position where they can focus on what they do and what they love to do, and have someone else look after some investments and things like that. We all do, whether it be a financial advisor, whether it be, a real estate investor like you and I, but they want a better lifestyle. And so, focus on that. Usually my conversations don't start off that way. Sure, now, people come to our home, they'll see what we have and things like that. So they already, if they don't know me, they'll recognize, okay, there's been some success at some point for you to be in this position. So, if there's any curiosity there, it'll come out naturally. Yeah. But before that even happens, there's so many things that you can draw upon to get that conversation going to the point where now you have somebody who's interested in it. Like,
just as, for teaching aside, just a little bit of a teaching moment, if you weren't invested in real estate, and just from this conversation that we've had already, I know that your family is the most important to you. You got 5 boys and 1 boy's going into university. Yeah. If you weren't invested in real estate, maybe you had a job, my conversations, university would probably cost a lot of money to do that. And you probably got ambitions for all of them to go, what's your plan, Domenic?
That's right. And that's a perfect way to start a conversation, right?
Well, it's not. I'm curious. Yeah. I'm just genuinely curious.
Well, from my standpoint, we started saving money for our ESPs a long time ago. So I was fortunate to be able to do that. But what I've learned too, and also using RESPs, they haven't really provided the returns that I had hoped.
Return of capital, maybe.
Return of capital, yes, and that's where we're at really. And so, and I'm looking at that. I'm looking at that portfolio, and I'm, asked maybe I should have put this all in real estate, but you got to diversify a little bit. And so that's how we did it. We put some RESPs aside. But we only did that for the first couple of children. After that, we decided that there's some better places to put it.
Right. So your first foray in was family and friends. And how did you structure your first deals? Was it just pretty straightforward 50-50s, joint venture? How did you, or was it even less sophistication than that? We're family, we're friends, let's trust you, forget about it.
Right. You know what? I think, we'll talk about trust again. And I think with your family members and friends is where you almost have to establish another level of trust.
Right.
Because if you depend simply on, hey, we're buddies, just trust me and stuff like that, it's you're probably not going to be as successful. So my first investor was my father and my dad. And he was one of my toughest. I thought this was going to be a slam dunk. And he was my toughest investor, almost to the point where it was time to remove conditions, and he still hadn't given me an answer. Right. So I remember this like yesterday. But it was a teaching moment to me in that no matter what, my dad was always loved me, and my other family members who also invested as well. They would trust me. But there's one thing that my wife has always said. It says, look, don't feel guilty taking money from your family members if you know that no matter what the situation, you're going to find a way to pay them back. Right. And she knew that just in the person who I was, I knew that as well. And so just on that basis alone, I wasn't fearing taking money from them, but at the same time, I had an obligation. And so,
well, if you think about it, you're not taking anything. You are actually putting it to work and getting them a return.
Right.
Something they probably weren't doing on their own already.
You're right. And really what spurred me to have them invest with me was not even so much, well, I'd say absolutely for me, I wanted to get into the business. But a big part of it too was, I looked at what my parents had saved up, and, they're still the mindset, that generation, still the mindset that the government's going to look after me.
Right.
And when you look at this, so this was, 2004. So we're looking at 14 years ago. My dad was just about to go into retirement, right? So they hadn't really,
the time
experience.
The time of life, they probably not want to take a bunch of risk.
that too, right? But they did have some money put aside, and so the long story short is that we made money for for them, and actually we did really well back then. And there's nothing better than to go back to your family members or your friends or really anyone who's invested with you, who's put their trust in you, to go back and say, thank you for investing with me. Here's your return.
I had another interview with the person, the way they put it was, I have an obligation to help my family first.
Yeah.
And everybody's family is different. It's a different dynamic always. But I think you come from the same thing as your obligation is the family first.
Exactly right. So, our family is in Montreal. We're over here. Now, my siblings are there helping my parents in whatever way capacity they can. And for me that allows me to help them from a financial standpoint. Well, now I've kind of figured out my purpose with not being there and saying, okay, well, at least I can help them financially, right?
How was that presentation to Dad? What was it? Was it a formal, PowerPoint slide presentation, or what was that?
No, I didn't give him a PowerPoint at all. It was just a conversation. So I happened to be in Montreal, and I had that conversation face to face, and over a glass of wine, and I said, "Look, you need to see what's going on, and here's what's going on." And I didn't put a formal presentation, but I did have some articles. But my dad's Italian, right? And he reads, but he might take him 30 minutes to get through a paragraph, right? So a lot of that had
of wine.
A lot of wine, a lot more wine. Yeah. And so a lot of it had to do with, you know what, I came prepared because really the real estate investment network really helped me, position it. I mean, you hear all the statistics and, and when you add all of those economical fundamentals together, you'd say, well, there's only one thing that can happen here is that values are going to go up. Now, we didn't anticipate, what they did do, but we did know it was going to go up. Yeah. And so, and the big part of that too, what made it a little easier for them as well is that I was putting also money into the deal as well. Right.
Fantastic.
So you talked about a 50-50 deal. That was a 65-35 deal because not only was I found a deal, I put the deal together, but I was coming up with half of the money as well.
Right. Yeah.
And so in any deal, even today, is that if I'm going to put money into the deal, I'm looking for a minimum of 50%, maybe more than that as well.
Right.
So, but to an investor, many investors like the idea of you putting some money in as well, because now you have skin in the game. And it doesn't have to be the same amount as them. It just has to be some money.
Right. Well, that's actually going to be the next line of questioning that we're going to get to. I'm just going to quickly reset the cameras here. So I'm here with Domenic Mandato. We're just dipping our toe into the pool here, and we can't wait to the next segment. So I'll be right back. All right, and we're back. So here with Domenic Mandato, we've actually just started tickling through the weeds of getting there. You've family was the first, friends. You've got your first multifamily under your belt. The next line of questioning I want to have is, when did you start doing the what I would call the foray into public money? And we're going to take a line of questioning around the whole realm of public money. Things that I think there's an awful lot of things that are going on out there right now. There's actually, I don't know if people are malicious or I just think some people don't know what they're doing.
Right.
And one of the things I want to do with this is to help educate, but also protect at the same time. I don't want anybody to step on a landmine that will, could put you out of business for a long time.
Right. Absolutely. Yeah.
So when did you start going into what you would consider the public realm of raising capital?
So up until 2008, it was family and friends.
And then you soon exhausted that.
And we exhausted that. And then the other option was, okay, we're going to go out to the general public. Now, recognize that in 2008, the world was changing from a fundraising standpoint because up until that point, you can put on a public seminar and raise money from anyone.
Yeah.
And that unfortunately resulted in a lot of companies going belly up. Not explaining to investors. There was not enough disclosure to the investors. There was a lot of money being raised in Ponzi schemes and things like that. So there was no real control per se in terms of raising capital. So we just started getting into that, and it wasn't until really 2009 where the Alberta Securities Commission came out with a new set of rules on how to raise capital, which required us to start raising money through third-party companies.
Right.
And so it's funny because the partner who I was working with at the time, we struggled a little bit through that whole process. Number one, it was 2008. And so, of course, the financial crisis. Number two, we only had a limited amount of success because the euphoria of raising capital happened all in 2006 and 2007. And so with the help of actually a person whom we had never thought of, he's an old friend, Philip McKernan. I don't know if you remember Philip. And just had the conversation with him, and he says, what if you just partnered up with a financial advisor company or something like that, right? And it just so happened at the time, this is where the whole business was going to. Third-party companies raising capital, they do that for a living, and they have a number of issuers like us, that in different segues or different, businesses in which investors can invest without being in the public markets. And so we were one segment of those, they call today exempt market dealers.
Right. So that was before an exempt market dealer really
that was even there. Before that. Yeah. And then it within a year or two, it became the exempt market. Right. And so it just so happened we started developing some relationships with some of these financial companies who were just registering themselves as exempt market dealers. And so we were one of the first who started raising money through these third-party companies.
Right. So you really just, so you outsourced. You outsourced capital raising, the public capital raising, because you were probably still doing your own capital raising through the exemptions and things like that as well.
That's right. We were doing that. We were putting ads out. We were, putting on seminars and all that. It became very costly, very time consuming, and we had some limited success, but not nearly to the extent of when we actually started to partner up with some of the exempt market dealers.
Right. So now, I don't expect you to know all of these terminologies because you're not a lawyer. And I don't, like I said, I don't expect you to know that. What are some of, and I've had some conversation with people, so what are some of the levels of you're working with investors, the exemptions, like things like that? Do you know kind of the flow on that, how that goes?
Yeah, absolutely.
Because you live in this world, so I imagine you have a working knowledge.
Yes. So in Alberta, or up until, I'd say last year, basically Manitoba West was under this exemption called an eligible investor. And an eligible investor is an investor who earns about $75,000 a year.
Right.
And now when you think about how many people earn that kind of money, that's a pretty big market, right? Whereas Ontario and in Quebec, you have to be an accredited investor. Now, accredited investor requires you to earn $200,000 or $300,000 with your spouse.
Right.
That's one part. If you don't earn that, you should have $1 million in liquid assets to invest domestically. And if you don't have that, $5 million invested internationally, but liquid, it would also constitute you as an accredited investor. There's also an exemption that if you invest $150,000, makes you an accredited investor too.
That's why you see a lot of people say minimum investment
$150,000. That's right. Which is, I don't know. An accredited investor is, and again, I'm not a lawyer.
Yes, we don't even play one on TV.
That's right. No, I'm not a lawyer. But at the same time, the idea or the premise of an accredited investor is that if they have money, or at least the sums of money that we just talked about, it is assumed that person will ask the right questions, will know what questions to ask, and inform themselves before making a decision. Whereas, perhaps a person who doesn't have that knowledge may not. And so Manitoba West, you have the eligible investor. However, the only way you can raise money is you have to create this document called an offering memorandum, or an OM.
Right.
Which is usually a minimum of 60 to 70 pages, and it can go up to about 200 to 300 pages if you want, depending on the amount of financials and information. But it discloses absolutely everything of what you've done, where you're going, and what's going to happen in terms of the money that's going to be invested.
Right.
And so the investor knows everything. But even to a certain extent, I mean, it's a document that discloses, which is great, but it's so heavily legalized that maybe some investors don't understand what they're getting into, or it's just so lengthy that aside, an accredited investor doesn't require an OM. So if you want to raise money through accredited investors, you are not required to have an OM. So because they're under the accredited investor exemption.
So that's just with the eligible investors.
That's just with the eligible investors. However, you can, of course, if you have an OM and you have an accredited investor, give them the OM. Why not? Right? I mean, so typically
an offering memorandum, it's the joke was, how do you get an offering memorandum done? You pull out your checkbook. Pull out your checkbook and talk to a good lawyer.
Well, and that's, you know what, and I've had some people who have gone into the business, and even before getting into the business have come to me and asked, I'd like to do the same thing what you're doing. And how do I do that? Well, the first thing is the checkbook. You do, an OM will cost you $60,000 to $100,000 just to get started.
It's a big cost of entry.
Absolutely, very big cost of entry. And now you have to also get onto an exempt market dealer shelf, right? You have to convince them to sell your product or to raise money for.
And then that could cost you anywhere, a percentage of they would take maybe a 5% fee on every dollar
That's
raised.
low.
Yeah,
That's low.
yeah.
But yes.
If you're lucky.
Actually, there's usually an upfront fee, which they have to do their due diligence on you.
Right.
And that can range from $5,000 to $10,000 to as high as even $15,000. And that doesn't guarantee you. You can be on the shelf. That still doesn't guarantee you to raise money. But now it's up to the agents and the people that work for them to raise money for you.
Yeah.
Well, now how are you going to incentivize them? And the way you incentivize them is through commissions.
Yeah, and that's people people that sell for a living. The more money they can make, that's what they want to push.
Absolutely, yeah. And that can range from 5% to I've seen as high as 12, 13%.
Now, one quick question before we move past this: the eligible investor, has that number changed? Is it still 75,000?
It still is, but what's recently changed is the amount that person can invest. So recently, Alberta changed their rules to reflect the same as in Ontario, and this is only in Alberta and Ontario, whereby you can, if you have an investor and has an exempt market dealing representative, if you're working with a dealing representative, your maximum allowable investable dollars into one issuer. So I'm an issuer. So one issuer would be $100,000.
Right.
If the dealing representative is not working with you, then the maximum, let's say, because I can raise money directly because I'm an officer of the company. So that's one exemption, that I can raise money. I don't have to use.
Okay.
But however, that's also limited as well. I can't be looked to see that I'm raising money and that's all I'm doing. I need a third party company. But if I have one investor, for instance, out of, I don't know, 20 or 30 investors and I'm allowed to do that. In that case, the investor can only invest $30,000 per year.
Oh, okay.
So what that has done, unfortunately, it has reduced the amount of investable dollars into private companies as well.
Well, so suffice it to say, this whole raising capital into the public market, it's an entirely new game. It's not your, it's not just family and friends and wing it on a wing and a prayer and just figure it out as you go. This is serious. Like,
no, it is. It's very serious, and truthfully, the only part of my business that I've always been concerned about is the raising money, right? Because now you have other people raising money for you. You have to ensure some way that, or you can only hope that the people who are talking about your company are explaining things to them in a way so that they're not saying like guaranteed investments or things like that, because that stuff is going to get you in trouble. Yeah. Right. So that, you can only hope for that, because that's going to get you in trouble with the Securities Commission, and you don't want to be on that side either. Right. So that's been the only part of my business that really kept me up at night. Not so much real estate, but the fundraising side.
Right. Well, yeah, it's just one more level of scrutiny and one more level of governance and one more level of, anytime you have any governing bodies overseeing and protecting the consumer, it just adds a lot more cost, time, and all that kind of wonderful stuff.
Yeah, absolutely.
Okay.
Absolutely.
So to just kind of summarize this, and hopefully I'm getting this right. So once you start going into public outside of family and friends, talking about eligible investors is typically the first, and then accredited investors.
That's right. And
typically after that, you have the offering memorandum type thing, but you typically need an offering memorandum to support the other two levels.
Correct.
And then then the next level after that would be is kind of where you're at now, is like the REIT level type things.
Well, even at the REIT level, you still have those different levels as well. Right. So whether it's an LP or corporation or anything like that, essentially.
So REIT is just a structure.
It's just a structure, just a corporate structure. That's all it is.
Okay.
So a corporate, if I can give it the levels, we started with corporations and then we had limited partnerships.
Yeah.
And now we have a real estate trust. So they're just different corporate entities.
Got it.
At the end of the day, if you're raising money, it doesn't matter what you're raising it for, whether it be a corporation, limited partnership, or a REIT, you still have those same guidelines.
Yeah. Now, in order to do it properly, the public, you have to have you can't be just going out raising 150, 200, maybe even $500,000. You probably got to be into the 3, 4, 5 million, even just to make it economic sense.
That's correct. Yeah. Yeah. You want to be raising at least Well, I mean, I've already explained the cost of that, right? Because also now when you're getting into a REIT level too, or even as a limited partnership, you have to audit your financials. So that's an added cost to your financials as well. Now, when we talked about, putting an OM together, that's the cost just for the OM. Right. The OM requires financials of your corporation of the fiscal year before that.
Yeah.
That has to be audited. So you're not getting notice, NTRs or notice to review. You're getting audited financials. So that's an added cost to that.
Yeah, I've heard the term subscription documents or subscription.
Yes.
Is that all wrapped within this, or is that something a little bit different? Is that a different kind of thing? It's mainly when you're, from what I understand, it's mainly when you're working just with the accredited investors, you can put together a subscription.
No, actually, it forms part of the OM. So the OM has a number of documents. There's about another 10 or 15 pages attached to it, and you subscribe. So essentially, you got a document that explains everything, and then if you're interested, you subscribe. You fill in your name, your address, everything. I want to subscribe X amount of units to this investment, and then you submit that.
So bottom line for all of this, it is deep, it's big. It took you 8 years to get to that point of getting to that. Highly recommend a good lawyer, a good accountant. Do you have a good lawyer that somebody maybe in Calgary can talk to?
I have several lawyers.
that really like you?
Yeah, there's really like me, and there's a couple of people that if you're just wanting to get into the business, I would highly recommend someone like Craig Bentham, for instance.
Craig Bentham, is he in Calgary here?
He's in Calgary. Yeah. Capital. No, it's not Capital Law. Mission Law.
Okay.
And Craig, he's been doing this for a very, very long time.
Right.
I believe Olympia Trust has a group that also does those documents as well. Mm-hmm. I'm not entirely sure. I think they have their limitations, and they actually hire Craig Bentham to help them with that. So there's a close tie between Craig Bentham and Olympia Trust. So, but then also we've had some other lawyers who've done it as well. Yeah. But at the level that that we're talking about, if somebody's considering about going into something like that, someone like Mission Law is probably
right. Now, I've often had this as a thought as I'm doing these interviews, and people keep asking me questions. I wonder if, and I'm just throwing this out as a guy who's the process you've been through, it might be even a business opportunity as a consultant to help people to go for a consulting process before they actually go to the lawyer.
Yeah.
Here's the we can split that business later.
That's right.
Here's the 10 things you need to have prepared before you start paying $700 an hour.
And you know what? That's a great point, because since I've started, there's been so many different segments of the business that has improved. That's one of those businesses. There are now individuals who have a business and their total purpose in life is to ensure that your offering memorandum is put in such a way that is looked positively in the eyes of the exempt market dealers, which is a huge benefit, because there's nothing worse. Because you go to a lawyer and you say, okay, well, here's what I do is I buy apartment buildings and I want to raise, $10 million. He'll go out and put something together in this little box. But then you go out to the exempt market dealers and say, hey, I've got a product that I want to sell. Here's my OM. And they look at it and they say, well, wait a second, you don't have this in your OM, you don't have this in your OM. No one's told me. So there are groups out there. There's a couple of companies that out there that, for a fee will look at your OM and saying, okay, well, I know that this exempt market dealer, likes this in the OM, this other, and it's usually, it's not very specific to the exempt market dealers, but it's whatever. If it's going to benefit one, it'll likely benefit others as well, and that's gold to me, right?
Yeah.
You might spend a little bit more, especially at the very beginning, but I think it's.
Is this something you do as well as a business model?
No,
not yet.
No, we haven't, because we have the relationships with those exempt market dealers. So before we actually finalize the OM, we'll go to those dealerships and say, hey, have a look at our draft. Tell us what you think, and if there's anything we need to change before we finalize this.
I find it the ironic thing of all this is you as the issuer have to pay to get all this documentation put together. And then you also have to pay for the exempt market dealer to raise the capital, and then you still have to sell the out of them in order to actually put the top of mind for them.
So yes,
so it's almost as much work to have to do all that. So you might want to just be either the lawyer or the exempt market dealer, where they have no risk. They don't own it.
Well, and you know what? A lot of times I complain about, sometimes I'm in the business to support these other businesses, right? Like accountants and lawyers. So yes, there is that side of business, but that's why it's almost important for you, maybe as a first step, is that what doesn't cost you so much money is you have an idea, you have a product, and we're talking about real estate here, but go to some of those exempt market dealers first and say, here's what I do, and here's what I want to raise money for, and here's why I think we're going to be successful.
Right.
And what does it cost for you to put a PowerPoint presentation? Nothing.
Yeah.
But if it gets them to the point you're saying, you know what, I'm interested, and if you put an OM together, well, there's a good chance that we're going to carry you, then at least do some of that soft selling first before you go out and spend all this money.
Yeah. And for those of you that are watching the interviews here, I had an interview with Justin Smith, who's just starting his own Hawkeye Wealth. He started his own exempt market. So that's what he would be, someone like that. So killer tip of before you just get proof of concept, just get somebody to buy into that. So what would be some of your best tips on presenting your opportunities to those people that are going to represent you?
Ultimately it comes down to who's going to end up selling your product. And so if you have the relationships with some of the sellers that are out there.
Yes.
So if there's a way that you can connect with some of those sellers and buy them a coffee and say, okay, what is it that you like? What are your top 3 products? What do you like about them? Right? And tell me why you like them. It might be a high commission rate. It might be that they have a good income product. Income as in they pay a distribution out to their investors. It could be, they only have real estate in Alberta. Maybe that's what he likes. Who knows, right? So all of those questions, if you're able to answer those questions, and if you're a salesperson and you're telling me all of these things and say, okay, what if I had a product that did exactly that? Would you sell it? And the answer would be yes. Okay, well, great. Now I need about another half a dozen of individuals who will have the same response to that. Yeah. So I can go to the exempt market dealer owner and say, I've spoken to this person, this person, this person. They're all interested. I wouldn't start with that, but I'd say I've got a product. Here's what I'm doing. And by the way, I've also spoken to these individuals who are really interested in selling it.
Right.
Because now you've made it easier also for them, because ultimately while they own the decision to carry you, they also now, they're not going to spend all this time if they don't know if their dealing representatives are actually going to sell it.
Right.
So now I'll take it to another level. I mean, we're talking about exempt market dealers, but if you take it to another level, which is sort of the IROC level, and the IROC level is,
what does IROC mean? Sorry.
IROC is, as soon as I said it, he's going to ask me.
As opposed to a high-end Camaro.
right. That's exactly what I thought, right? So I will have to get you the exact name for that acronym, but it's almost at a bank level.
Okay. Institutional.
That's exactly what it is. It's institutional, but they still call it retail. So whereas exempt market dealers are also considered retail, there's IROC firms that are more institutional than retail, but they kind of cover the whole gamut. But they're a little bit more sophisticated with respect to with fundraising, because they're governed. They have their own governance with respect to how they raise money and how it's done. It's a lot more sophisticated than an exempt market dealer. Remember, the exempt market dealer is only about 6-7 years old, maybe 8 years old, whereas the IROC has been around for a long time.
Right.
And so there's another great example where, if you want to get on an IROC channel, the first thing they tell you, in fact, they're even more efficient. They say, you know what, before coming to us, why don't you see if you can get a few tickets, as they call it, tickets. And tickets meaning getting some investors to invest, or some commitments from advisors saying, you know what, yes, I put $250,000 or I put $5 million into that. Right. Okay. And so that way, then I come to you, okay, Russell, you're the owner of the IROC firm. And I said, I've got Jim, I got Bill, and together we're going to raise about $5 million. They've committed about $5 million onto this. And so at that point, they say, okay, great. give us the offering memorandum, give us all that. So we're going to take a look to make sure it meets all our checklists, and then we're on the shelf.
Right. So once it's on the shelf, it's up to the exempt market dealer to bore the cost and the marketing expense. And in theory, they should have a list of people already potentially built in that they can just reach out to. In theory,
they have their own people to sell. However, the marketing costs.
Oh, you have to bore the marketing costs too.
Marketing costs on me. Oh. So we have to bore, and sometimes there's you can arrange it so that they cover some of those costs with you as well. But generally, the issuer covers the marketing costs.
Okay.
Now, again, you can get on the shelf, but everyone will tell you and say, okay, now you're on the shelf. This is great, but we're just not going to sell it.
The work just starts now.
The work just starts. It's not going to sell itself. So now you have to meet with every single representative and pitch them the story and then maintain that relationship, right? And it's constant communication, just like you would do to your investors. It's constant communication to the advisors to let them know, here's what's going on, here's what's taken place since the last time we spoke, so that they know that, okay, there's something happening here, there's some progress. And as they get more comfortable, that process can take anywhere from 6 months to even 2 years before you'll see someone who's been cold at the beginning and then starts to invest with you.
So in essence, you've just essentially without having to take the cost to hire, which you do have all the costs, you just put almost like a sales force in place, and you just are managing 5 or 6 people as opposed to managing 200 investor
exactly
relationships.
What it is.
But I imagine you're still at the same time, you're still building your own investor database and all those kind of wonderful things at the same time.
We are, however, Russell is.
But I guess you don't want to you don't want to be the competition to your exempt market dealer. Right?
That's exactly what I was going to say. Yeah. Yes, that's exactly what I was going to say. So, and you know what? And maybe I don't want to be the competitor either, because then they own the relationship with the investors. And so the investor gets to call them and you're not inundated. So that, if you inform all of those dealers and advisors on a continual basis, well, they'll have that information. So when their investors does call, they've got the information. So we're not getting as many calls as we would normally would if we had all of these investors call us directly.
Well, I told you guys this was going to be a little bit more of an advanced conversation, and we need to have these advanced conversations because there are so many people in this program that are aspiring to more. And here's a guy who's gone through it. Now, before I do forget, Domenic, please let people know your company name and maybe a website. And if anyone would like to get interested and see what you're about, where would they get a hold of you?
Well, they go to investplusreit.com, and there's all of our information there. Just click on the investor tab, and the investor tab takes onto our investor website, which there's a presentation there. There's a quick flow chart or a green sheet, as we call it, that has a 2-page summary of our company and the offering and all that. And
I was just on there. Just credit what credit due. That's a very high quality website that you have together. So I know it has a lot of your fingerprints on it, because just when you do something, you do it well. So,
well, I appreciate that. And we, again, it's all about getting the right information to our clients and our potential clients. Right.
So I'm going to just reset the cameras one more time here quickly. I'm here with Domenic Mandato. We got one more segment we're going to get into, just a little bit of the last one. I want to get into maybe just some list building, like how do you build a list? Are you still building lists yourself? I want to get into some mistakes that you think people are making in the marketplace right now. And then I want to find out what's next for you.
Absolutely.
With that. So we're right back. Man, we could sit here and chat all day, couldn't we? I do want to just have one more segment here with you, because but here's one thing that's happening with a lot of these interviews is they're turning into, the onion has so many layers that it's turning into multiple different conversations. So I'm going to put the invitation out if you're ever in Vancouver. I have a studio at the home office. You're more than welcome to come by if you ever want to do some mini video shoots or whatever.
Thank you.
You're more than welcome to come by. So we're back here with Domenic Mandato. And it's funny, off camera, we were just having the conversation, and Thomas going, man, if I actually knew this entire process at the beginning, sometimes you don't dive into the deep end until you're like 3 steps into the process already.
Yeah, and you know what? And sometimes ignorance is bliss. It's like any business that you get into. If you knew all of the pitfalls, you probably wouldn't get into it either, right? So,
but then you also don't get all the reward of the actions that you have taken.
True,
right?
And also, sometimes it's kind of good not to know because you'll get to learn over time. But the advantage here, of course, is that there are other ways, there are other channels that you can utilize. It doesn't all have to be in this manner, but if you do, and you're still committed to going down that path.
Yeah. Well, if you think about it, all you did was you focused on what you wanted. You didn't focus on the obstacles.
That's exactly right.
Right. There was lots of obstacles and lots of things to overcome, but it just this is where I was going, and you had aspirations to scale it bigger than just family and friends.
That's right.
Just because you got the 5 boys and everyone got
mouths to feed,
right? And more important, and I just know who you are too. It's more important. It's more than that. Is you're wanting to give back at the same time. More than that. So, a couple lines of questioning, and then we're going to get into just wrapping this up. So list building. I know you have built a list, and you have a list, and you have a database, and you can probably, if you wanted to go out on your next business venture or maybe a next buy, you probably could just go to your in-house database and just say, guys, we're raising $2 million, and who's in, right?
Yes.
And what would be some of your tips on building a list of investors? And I imagine you started with nobody at first, and you got it to a certain point. What would you suggest?
Geez, you know what? It's not real complicated. I mean, you're having a barbecue at home, and you get to know someone really well, or you go to someone's house, and you get to meet new people. If there's any indication, at some point you're going to have a conversation. Okay, what is it that you do, right? And so those conversations tend to, and I at this point I keep it so light, especially with friends. You get to a certain point where you want your friends to be your investors, but then there are times where you just don't want them to be investors, just because you want to keep that relationship the way it is. Sometimes people get funny with business, right? So
once money changes hands, it changes sometimes.
It does, and unfortunately, there's been some cases where I've seen the relationships maybe not go the way they wanted to. So I'll be very careful, and over time you get better at that. But that said, if there's any indication that there's an investor who's really interested, the process is pretty simple. If I get a sense that someone's interested, that is not the place for me to pitch the deal. I might tell them about a particular deal that I'm working on and keep it very light. And if there's someone who is interested in learning more about it and said, you know what, maybe let's park this conversation, and I'll give you a call. Give me your number, and I'll give you a call on Monday. We'll set up a time for us.
So that's really just kind of I call that an investor discovery session, or a qualification. You're essentially qualifying.
Absolutely. And if I can pay a compliment to you, Russell, you have that questionnaire before an investor, before even meeting with an investor. You have that questionnaire that you give out to your investors, right? And saying, what are your expectations? Are you looking for distributions? What's your time horizon for investments and all that? And I to me, that is gold, because ultimately, if you're trying to close on any sale, and this is sales, if you're trying to close, what better tool to have that information beforehand, because now you can tailor the conversation around what the investors needs and wants are. Right.
And it's not what the money necessarily is, it's what the money means to them, more importantly. So, if back to our original conversation, if you weren't investing in real estate and you had 5 boys and they're all going to school, I'd be positioning this as the boys' university fund.
Absolutely.
It's not an investment. It's not a piece of real estate. It's how am I providing a vehicle to you to help the boys go to school?
That's exactly right. And ultimately too, you touched on a point. One of the critical aspects right now when I'm looking for, or I'm talking to an investor, is I want to know if what they're investing is that their last $20,000 or $50,000 because I'd rather not. I'd rather not talk to that not talk to the investor, but maybe say, look, maybe now's not the time. Maybe get to a position where you have a little bit more than that. This is not because I'll guarantee you that investor is going to call you every single month asking you what's happening. And ultimately, what you want is you want an investor who's probably investing about 10% of his wealth. Right. So if he's got and let's be clear here, you're not asking how much money they have and how much, what their personal net worth is. But if you ever had the conversation around, we're going to need $100,000, and that's the only money that they ever have, it's probably good to just walk away and just say, look, let's have another conversation some other time. You want to make sure that money is a very small percentage of their overall. If they own businesses and things like that, then there's a good chance that is a small amount of their entire.
And also in the terminology, know thy clients. Knowing it protects you one more layer. Like if you ever come back and securities ever comes a knocking and go, okay, these people that you've raised money from, how well do you know them? Oh, let me pull out my questionnaire. Right. I know exactly here. I got all these 25 things. I've actually been to their house. I can tell you all these things. I've known them for 5 years. Right. And maybe you had an exemption signed off and checked off over the box that they fit under. You're protected.
Right, you are, but you also got to be careful in also those types of questions that you're asking, because from the security standpoint, they're saying if you're asking those questions, you're also providing suitability. So, for instance, I've met someone who's got several businesses, and he's just told me he made $3.5 million on his deal, and he just closed. So I know he's got $3.5 million, and if he's going to invest only $100,000, now. Yes, just like you would say, I would mark that down so that if something ever came up and saying, well, he's an accredited investor and here's why. So that's one way to protect it. But we're kind of getting off topic a little bit. So your question is, what's your checklist? That makes part of the checklist as well. If I know that they're investments, right, I make sure that they know also the timelines. Right. And the timelines are critical because when it's people don't want to part with their money, but ultimately at the end of the day, I want to know if they're interested or not. And at the end of that conversation, if they fit everything in terms of, I'm looking, okay, what do you think? Do you have any more questions? And if you don't have any more questions, is this something that you would like to do? Yeah. And if the answer is yes, okay, do you have an idea of how much are you looking at investing? And then I'll go from there. In a lot of cases too is, some of the best, the best marketing is referrals as well. Right. So at the end of that conversation, maybe not at the end of that conversation, but once they have invested, and even when they've said yes, before you even close, we'll ask the question saying, is there anyone else who's like Russell who would be interested in something like this, who's also looking to build a college fund or buy a new car or whatever the case may be, right? And so
your happy investors are your best sales team, investor referrals, right? Absolutely. Yeah. So what would be some of the, you've touched on a few of the key skill sets on this whole thing, have some sales skills and things like that. What would be some of the best skill set that somebody can sit here, let's say someone's brand new and they're just learning it and they're going to do their first joint venture. We've gone a little bit further in the deeper end, but that's good. What would be some skills that a person should pick up that would help them in this journey? Well,
I've been blessed with the company I used to work for. They put me through a sales training program, so that really helped me. And I didn't know I could sell until I went through that. However, where you could start with yourself. Start with, if somebody was pitching you the deal, what would you want to know? Right? What would be some of the questions you would want to have answered as well, because I still do that today, right? And then say, okay, well, I know Russell, he owns real estate. What is he going to want to know, right? And so, I know that he has some experience in real estate, so he's going to know a lot of the things that I already know. So I'm going to put myself in his position, what kind of questions he's going to ask. And so from a sales standpoint, those are, you would start with that. I would then, make sure that the information that I'm providing to him is of any value to him. Yeah. Because there's nothing worse than going with a mission only to find out that you're going in this direction. Really, he was, he was going the other way. So in terms of sales, there's lots of programs out there that can teach you some of the basics. There's lots of free stuff on the internet that you can learn on how to sell. But most important of everything is get as much information of that individual as you can, because that's going to help you tailor your conversation around it. Right?
And you know, really the best salespeople are not people that actually sell something, is actually just solve a problem and solve a need. And they genuinely, authentically care to help that other person.
Absolutely. I mean, if you know that you're talking to the husband, but the husband doesn't make a decision with the wife, then you shouldn't be having that conversation just with the husband. Make sure that the wife is there as well. Right? I love it when both husband and wife come, because they're looking at each other. There's a decision that's going to be made in a relatively short period of time. And so that's just one aspect of, who's the decision maker of who's investing, right? So
which is actually a great segue into what are some of the mistakes that you see people make that have out there? You've been around since, the turn of the century. And what are some of the, it might be even the mistakes you've made or mistakes you see other people make at the same time.
Yeah, there's a number of things that can go awry. You know what? Probably, I've had personal, and I've had also people work for me who made these mistakes. There's nothing worse than going into a meeting with someone and not asking questions,
right?
And just going straight into the deal. And there's nothing worse than that. And I've seen that happen. I've had to stop meetings because I've had my salespeople start right away before we've even asked the question, are you even interested in real estate?
Exactly.
Let's start with that. Do you even invest in real estate? That's one of my most popular questions. One is, hey, have you ever invested in real estate before? Yeah. Because now you know the level of sophistication that person has. And as they said, I've owned about 4 or 5 properties. And okay, now you know the level of conversation this is going to be. Yeah. No, I've never invested in real estate. Well, let me talk to you a little bit about the power of leverage, for instance, and things like that. Now you take it to another level, right? So ask those questions, get to know who they are, what they want. Yes, they've answered your questionnaire, but now you want to know him as a person, right? There's nothing worse too than also figuring out what that person is personally, what kind of character he is, because he'll let you know if they, if they want to invest with you long term, if this is going to be a short term thing, if their expectations are too high, maybe not high enough, whatever that case may be. So asking those questions front end. Also, starting off with not only the deal itself, but the returns and over projecting your returns. That's one of the things that a lot of my days and a lot of my time is spent on that pro forma, right? I'm looking at, here's what we're going to buy it for. Here's where I think we're going to end up. But I can't even tell you what's going to happen in the next 6 months. I'm projecting on based on all the information that I have today. Here's where I think we're going to be, but we may not get there, right? And so not explaining the pitfalls, right? We talked about subscriptions earlier on. Well, on the subscriptions right now, if you look and you're writing right beside where you sign, it says, I may lose all my money.
Yes.
And that conversation could stop right there, right? But if you've done a really good job of explaining, look, ultimately, nothing is guaranteed. The government may say, you know what, we're not going to rely on oil and gas anymore, and we live in Alberta, and everything can go into the right.
Well, and almost those things should start off with the only thing guaranteed is death and taxes.
That's
then
right.
Everything else, everything's off the table.
That's exactly right. So maybe sometimes it's not explaining also the pitfalls. I like to explain because I just want to see what the reaction is, because ultimately, it's real estate and nothing in life is guaranteed. And so if you go on the premise that we're going to make a lot of money and we're going to, make sure that you can get your big boat and that's where the other pitfall of raising money is.
I've said it many, many times. You guys have heard it, is the easiest part of all this is to get somebody excited. That is the easiest thing is to tell an amazing story, get somebody all hopped up in sugar. The hardest thing is to fulfill upon it.
That's right. It is. It is. And now you're having to explain that and all that. So that's where, that's another couple of parts. There's lots more, but, we don't have all day.
No, I hear you. Well, which leads into the next line of questioning is, So you're in a different stage in life. You're like me, where we've known each other since the beginning, right? Probably 15, 16
That's right.
years. And it's been far too long, by the way, since we last chatted. There's getting a little bit more gray in there.
Oh, this is just color. This is just color. I've colored it this way. Yes. I'm usually black.
Well, what did Thomas Byer call it? He said it's a new hair color by L'Oreal called Wisdom.
Wisdom. Right.
And we've had a lot of wisdom in the last few years here in Alberta.
Absolutely.
With some things. And there's been some, that could be in another interview. It's just some of the challenging times. But I think, honestly, these challenging times have created incredible opportunities.
Absolutely.
Which leads into, so you've accomplished a lot. You're in a different phase, and the boys are now getting older, and they're now going off to university. There could be grandkids coming down the road.
Okay, well, let's not get ahead of ourselves.
And you got to start thinking about legacy planning and all that kind of stuff. So what's next for you? What's next on what's the next mountain that you're climbing right now?
You know what? For me, it's still business as usual. We're growing the company. I'm getting some joint venture partners as well, right? So we're also building that side of it too.
So you're bringing investors into the business side and not maybe into a real estate asset?
That's right. Okay. Yeah. We're also looking at some other ventures that are closely related to what we're doing. But maybe not exactly. So development is part of the equation as well. What we're looking at doing too is we're looking to partner with some. We've talked about exempt market dealers. We're talked about IROC. There's another group called family offices. And family offices are offices that are a family's wealth that's being run by a CA or a CFO, and they invest the family's money.
Right. Okay.
And so there's a lot of those family offices that are out there, and they have a sizable amount of money. And of course, they won't strike a check for less than $10 million.
Right.
And we're looking at targeting some of these family offices to joint venture with us with the REIT. So not necessarily invest into the REIT, but join us and work together. And so because they like to own the real estate as well, but they need an operator, someone who's done this before to give them all of the, to meet all their needs in terms of managing the assets. So that's another level of our business that we're working towards. There's I mentioned the whole development side of it as well, and we're just in the process of transitioning a lot of our existing multifamily into commercial, and I'm really excited about that. Particularly in industrial and some office.
Well, very good. Well, I do have one final question, and I'm just going to put it in your mind just as a second. Is kind of like a final inspiration you want to give to somebody if they're, maybe if they're getting started, maybe they're feeling a little stuck. So that would be the last question. But before I ask that, I just wanted to acknowledge when you took everything up to such a professional level. It was, most people were just in it and it was a hobby and it was just a part-time thing and stuff. Every time I would look to what you were doing, it was just always professional. It was always business, and you always found a way to just elevate your game. And I wanted to just thank you for always setting such a high bar that it was, for a guy like myself or for all people within the community, it was just something it's just the definition of a leader. And you did it with such class and such style, and you always did it with a smile on your face, and you were always willing to help people. And I just wanted to just acknowledge and just thank you for
that's
that.
Very nice. That means a lot coming
from you. So that's what I've noticed over the years. Well, so if that's what you intentionally tried to do,
what a great actor I am.
Well, if that's what you intentionally tried to do, check mark. 100% across the board.
Thank you. I appreciate that.
So the final question is, what you can pick one count, maybe this one over here. What final words of inspiration or wisdom do you want to leave to somebody who's maybe feeling a little stuck?
Being stuck is just part of the business. I've been stuck several times. I still get stuck. And what I found is being stuck means that you don't stay in that moment in that position all the time. If you choose to, you have to choose to move forward. You have to find another way. If you can't raise any money, just go out and look at some buildings. Spend some time looking at the neighborhoods that you've been investing in. We got stuck, at some point where we couldn't raise any money. And so we started to look inwards. We started to buy buildings. We started to, how can we improve our operations? And we discovered a lot of things that we can improve as well, right? And those things open up other doors as well. There's always I believe that, God has a plan, and there's a plan for everyone. And so, if it feels like you're pushing the rope, and I've pushed the rope a lot of times,
uphill.
Pushing the rope uphill. If it feels like you're pushing the rope, it only means that your time is not yet to come. It's not the right time. And all it means is that you might be doing the right things, it's just the timing isn't. And so just give yourself a chance to believe that you're doing the right thing, and try different things. Try new things, right? And it's, if this is not working, try something else. If that's not working, try again. Try and try again. I mean, some of the best and the most successful people in the world, what you don't hear about Thomas Edison, failed 1,000 times before the light bulb was created. Things like 1,000 times. I'd give up after 100.
Yes.
Right? 100 times. So if you truly believe that this is for you, it may not be exactly that you set out to be, but it'll end up in a position or something that very closely related to, and you'll still be happy with that result anyways. But never underestimate your ability to succeed. Never underestimate the people who can help you, and make sure you thank the people who helped you. So
wow,
for that, thank you.
What a wonderful place to finish off.
Is that good?
Domenic,
all right.
You always over-deliver.
Thank you.
Guys, want to thank you. The next interview is upcoming. You're Domenic Mandato. Wow, I'm just tickled pink. Thanks for all your time.
Thank you. Thanks,
guys. Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.